Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 14th of March. All right, now got a pretty epic week coming up as far as a couple of central bank announcements. The UK and the US both expected to raise interest rates. Bank of Japan not expected to do anything, so don't hold your breath there. But I'll go through the economic numbers and what days to look at and all these sorts of things. But first and foremost, when you start the week, have a look where everything is, okay? If you've missed the end of last week's trading, we closed Friday, right? Another big negative day for US equity markets, and that sets a pretty horrible tone for month to date, year to date global equities. Okay, Aussie and Kiwi have been a little bit spared, probably just because they're so far away from the rest of Europe. But that's what's been going on, right? So that's where we left the market. You had a bit of a risk-off situation. The US dollar sort of came back a little bit of a knee jerk. At the moment, though, as we start the week, right, that's where we left. What's going on right now, and you need to really sort of understand what's going on, because at the moment, if you don't have a news service, right, and if I just switch you over here to the news section I've got here, now there is hopes for Russia-Ukraine peace talks. Now they are still beating each other up, or the Russians are beating the Ukrainians up, but the main thing is the prospect of some sort of peace talk, some sort of deal. I don't even know what the deal is, because it looked like Russia just invaded the joint, but that could be a good turning point for some of these markets, especially obviously oil. So with the announcement of those potential peace talks, the prospect of it, it's positive. We see US equity futures rallying, right? So that should give an underlying bid tone to Euro, Sterling, Aussie, Kiwi. At the moment, hasn't been a lot of movement, but there's been a bit of fracture between Euro and Sterling, right? Because obviously their proximity to the issue in Europe, and the Aussie and Kiwi, which have been sort of benefiting from being so far away, the Antipodeans aren't really in sync, right? So just be careful of a risk-on, risk-off profile when it's not exactly clear at this point. If I go down, I think we'll start to see maybe a slight move lower in some of the, like oil, for instance. So just keep an eye on that as you go forward. The safe havens, well, I'll tell you what, it looks like they've been pretty much unwound. The yen and Swiss, dollar yen, dollar Swiss, both higher. So that's, the whole, and I'll show the volatility index is a key one. It's still sitting around sort of 30. So it looks like there's still a little bit of caution there, but it's not as extreme as it was. The crypto market, well, I tell you what, they've sort of been getting belted, right? Beaten up since the start of the year. And that sort of flows on from their whole global events, right? So no sort of reprieve just at the moment. I'll show you some key levels here on Bitcoin, Litecoin, and Ethereum, really coming up to major critical levels where they could actually have a massive fall, pretty much the same as the equity markets. All right, so let me just show you some of these charts, and then I'll come back. We'll go through the calendar and sort of square you up for where things are going to be happening this week. All right, so just on the global markets, the dollar index, okay, a little bit of, you don't expect it just to go straight up in a straight line. It's a bit of a knee jerk there, drifted lower, came back, closed the week, on a positive note. I saw Euro come back and once again test that sort of 111.20 level. I've got that sort of yellow horizontal line, which matches up with the previous low before it dropped, and also comes into line with that trend line now. So tell you what, for those who are patient and waiting for those good levels to sell Euro, you got your opportunity. And I'll show you some other charts on the longer term side of things, down through like 108-ish on Euro really opens the door for a big move to the downside. Now here's the volatility index. As I said, it's not really peaking, but it's still there or thereabouts. Once it gets back down towards 20, everyone's comfortable with everything that's going on. Maybe those Russian-Ukraine peace talks might sort of do something there. And you can see the top here, obviously, in oil up above 130. Now, it looks like it's got a little bit of a base here around 105. But I tell you what, I'll draw a trend line there in a minute. Down through sort of 100, 95, we could see this thing retrace back down to sort of $80 pretty quick, especially if there's some sort of resolution there between, or in Europe, I should just say. All right, S&P, well, I'll tell you what, it's just above the 200-day moving average. It's hanging on there, whereas the NASDAQ, right, had all the benefit from the pandemic. It has settled underneath that 200-day moving average and looks like it's ready for lower levels. And I'll tell you what, with the Fed coming out raising rates, or expected to raise rates on Wednesday, it opens a door for them to open the door, like Pandora's box as such, with their statement and forward guidance. Like, we already expect them to raise interest rates, but how aggressive are they going to be with their next rate hikes and all that sort of stuff? That's what we're waiting for. And that could be the catalyst for the NASDAQ to get hit again, or US equities in general. Once again, Bitcoin, well, it's found a bit of a base down here, but it sort of looks like it's on a bit of a slippery slope. My next round of charts will show you that. And once again, sort of a bit of a safe haven there. Gold, pretty much tracking oil, right? If you're looking to trade gold, I'd overlay your oil chart. These things look like, like the same instrument, okay? Now, if I just come out, quickly whip through the Forex stuff. Now, I mentioned this last week, a bit of a chance for dollar Swiss to pop the top side. Well, we got that pop. All right, I've widened out the time frame on these bottom charts: Euro, Sterling, Aussie, and Kiwi, just to show you where these very long-term support lines are, right? And this is why Sterling is down. It's cranked through that last support level. If anything, you're looking at big round numbers like at 130, the figure as being sort of like the last level of support. And this is with the expected rate hike from the Bank of England, right? So that doesn't spell well for the UK. A lot of Russian money, obviously, in the UK, which has been pulled out, and that's why we sort of see it lower. Here's this level down here, long-term support trend line in Euro. Once again, unless we get these peace talks happening between Russia and Ukraine, these things look like they're headed lower. And to give you some perspective, the Aussie and Kiwi sort of nowhere near there. They're not under pressure at this point, right? So not much to really sort of go by there. Dollar CAD, well, if anything, I mean, it's been under pressure with oil, right? Oil being the green line there. It might be a bit hard to see, but I can see a really big topside level here, 129.63. What we need is oil to fall back down towards $80, and we might see a spike above 130 in dollar CAD. But so all I'm trying to focus on at this point is just getting trend lines up that could potentially give me opportunities to trade, right? And make good trading decisions around. That 107.95, as I said there in Euro, is a nice little level. Dollar Swiss has already left the building. Euro's already up there, like dollar yen as well. So these top charts don't do much for me. I mean, Aussie and Kiwi, well, they're not really reacting that well to the whole European issue, right? Bit of a safe haven almost for those pairs. Sterling's going to be a major focus this week with the Bank of England Thursday. But there's also another bunch of employment numbers and a whole range of other things coming out. But bearish outlook there, and it may be enough to push Euro down here as well. We'll have to see how that plays out. Right, equity markets. Well, this is a pretty quick one. The volatility index, as I've already sort of said, sitting around 30. But all of these charts basically the same. They're sort of all broken down. They do not look at all well, right? This is... it's like having a whole boat crew of scurvy going through the boat. It's like, doesn't look good. Interest rates are going up globally everywhere. Equity markets have had a great run with this low interest rate environment for a number of years. I tell you what, we could see some massive corrections here across the board in global equities. It's on the cards, especially the way the central banks are now starting to get very aggressive. And here's some of these cryptos, right? So I've got the hourly charts at the top. Right, these things look like they're just trading sideways, right? But when you get the bigger picture, you can see that they're sort of under pressure, and we've got some big levels here, right? We go through like 138, 137.5 there on Bitcoin. It's straight down to 28. The last level here for Litecoin, last level of support not far away, as is the same for Ethereum, right? So they are hoping for good news there along the lines. I'm not sure exactly where, but that's what what the market's sort of hoping for. So when you come back and that's the technical aspect, then you come back and have a look where direction and momentum's coming from. That's what this page is giving you, right? So at the moment, US equity futures up. That's the sort of real tangible, something we can hang our hat on, right? You would expect, the dollar probably to drift lower on that. And as I said, euro, sterling, Aussie, Kiwi to go up. Euro and sterling are finding a little bit of a support, but you know what? There's not a hell of a lot of activity at the moment. And the main thing is, talk about the this Russia-Ukraine peace talks. It's going to put a little bit of downward pressure on oil. And that's pretty much all we've got. Because if you look at the economic calendar, right, you don't have much on a Monday to really go by. There's no data to shake the market up, right? So what we want to do is see how the market recognizes the news from the weekend, factor that into the market, then we can start to sort of look for opportunities. As I said, like Tuesday, well, the start of the UK week, really, as far as the aggressive numbers, unemployment numbers, average earnings. This is a bit of a precursor to Thursday's Bank of England interest rate hike. Okay, then you got some ZEW numbers there out of Europe and Germany. Maybe a chance to get some weak numbers there. Then we might start to see euro slip below that 108 level. You got a bunch of peripheral PPI and a few things coming out in the US. It's like, yeah, whatever, mate. The market will wait for the big numbers or the big events, right? We've got some CPI numbers here out of Canada. You really need some sort of resolution with what's going on with oil for this to really make sense. At the moment, dollar CAD is getting pulled all over the place with the US outcome for the rate hikes. You got Canadian data, you got the Russia-Ukraine issue putting upward pressure on oil. It's a bit of a dog's breakfast. If we get that sorted out, then this could come into play. US retail sales, it's a pretty good number, but we've got a bigger event later in the day, and that's the Fed interest rate decision, expected 0.25% interest rate hike. As I said, the key part to this will be almost in the press conference. The statement will come out at the same time as the decision, right? Then they have the press conference. That's going to explain what they said in the statement, and maybe give us a bit more of a clue around what their forecasts are for later this year, right? Then you come into Thursday, we have the Aussie employment numbers. Okay, usually it's a pretty big number, but the Aussie's been on, as I said, Aussie and Kiwi, almost like a bit of a safe haven just from their geolocation, right? Long way from Europe, so out of harm's reach. But then we do come into Europe, Christine Lagarde, the ECB president, talking, get some core inflation numbers, have a look. They're the final numbers, so you don't really get much variation in those, but it's something to look at. Now, so going from the Fed, now it gets pretty exciting as far as the markets go. Another interest rate hike expected by the Bank of England, and I'm expecting a very aggressive forward guidance, right? So that may see sterling come back. But I tell you what, it's on its knees at the moment, cable, right? So with that, it's a tough trade because you're not going to be buying. This is already factored into the market. The market's lower, right? So if they're not aggressive, but the market is expecting an aggressive talk on this statement. If they're not, well, sterling is going to keep heading south, right? So depending on what the Fed does on Wednesday, we'll have a bit of a leeway into all the US numbers coming out on Thursday. Get the Philly Fed numbers. There's a lot of bits and pieces and components here, right? Industrial production numbers as well. So these numbers may be too close to the Fed meeting, all right? Or if the Fed comes out, so for example, they're quite aggressive with their statement. So look, we may have to do some more of this interest rate hikes. And then we get some really strong numbers out of the Philly Fed industrial production numbers Thursday. Well, the dollar's going to run again, right? That's what you're really looking for, a bit of a connection with those various bits and pieces. Here's the BOJ. Right, was it the BOJ there? Core inflation numbers. Oh, here it is here, down here, coming into sort of Friday's trading. I don't expect any changes from the BOJ, so don't hold your breath there. But to end the week, right, as I said, it's a big week. The Fed, Bank of England, a whole bunch of employment numbers, UK, Australia. And then you come back down here, coming into Friday's trading. This is like the last resort for those traders who are probably gagging to make some money. Canadian retail sales, housing numbers. Once again, you're really looking for that Russian-Ukraine issue to be settling down for the fundamentals to impact. If they do, well, then these numbers get a chance to sort of really make sense. Otherwise, it's not really worth considering because you won't get the pure move from the market. And then to finish off the week, we got some existing house numbers and Evans and Bowman, a couple of Fed officials there speaking as well. Right. So all in all, it's a pretty blockbuster week, right? The fact is we do expect the Fed and the Bank of England to raise rates, right? So this makes these events tradable, right? Obviously, if they didn't, well, then you'd see a big move the opposite direction. But you know, the market isn't wrong here, right? So there are expectations for interest rate hikes. The key part to the next move will be what the statement is from each central bank in regards to, okay, this is what we've done, why we did it, and you know what? There's another one coming up in 2 months or 1 month or 3 months or whatever it is, right? So we're looking for that guidance for the next sort of major move. So when it comes up time for these events, that's the time to look at your charts, check those big levels, see if there's anything going on, because this is where the trends come from these central bank meetings. All right, so plenty to look at there, guys and gals. As I said, like there's so much to be looking for. So get to your calendars up, tune up your charts, okay, depending on what instruments you're trading, and get ready to trade because this is it's action stations. All we really need, right? If we took out the Russian-Ukraine issue here, you'd have really good aggressive markets with volatility. Right, the volatility is our friend. Don't think it's not. You just need to be careful where you're getting in and getting out and managing your capital. But we want volatility. It gives us opportunities. So don't shy away from the big events. Trading them at the time of the release is problematic. Liquidity disappears and comes back in. So make sure you sort of plan around that. If anything, give yourself a minute afterwards. Right, you might miss the first move, but it may save you a lot of cash from getting whipsawed out of the position just on the actual spreads widening up. All right, guys, pretty big, as I said, pretty big week. Lots of excitement, and we'll see how we play out. Good luck, everyone. All the best. Cheerio.